Thank you, Sarah, and welcome everyone to this session on Form 1099 Miscellaneous. We're going to be moving really quickly today because we've got a lot of ground to cover. Anyway, I'll start off with some reminders on what's new. We'll talk about information returns in general. One of the more popular forms, I guess, is the 1099 Miscellaneous. It's certainly used quite a bit. And we'll be talking specifically about that in a number of instances. We'll talk about correcting errors. We'll talk about the taxpayer identification numbers, soliciting those taxpayer identification numbers, and what to do when you get notices that you need to send out backup withholding notices, the B notices. We'll talk about verifying those numbers prior to submitting 1099 so that you can minimize errors, and talk about backup withholding, and then briefly about penalties and other problems and your questions. Should have time for your questions at the end. I would like to mention that if we don't have enough time for all of the questions, or we don't get to your question, or we don't answer it adequately, we will have an opportunity, or at least give you some where you can send your questions, and after the session is over, even if you think of something later. On the other part, though, we will be holding the questions until the end, and so if you can enter those into the Q&A session chat function, that would be helpful for me as well, and then I can answer those when we get to the end and get right into it. Okay, let's get off and started on the reminders and what's new. There's some the IRS, for beginning with certain 2018 forms, they now have some online fillable forms. The online fillable portion would include copies 1B, 2, C, and D, but not copy A of the various forms that are available to type in. They can be typed in and printed for the recipient copies and also the state copies, but not the copy A that goes to the IRS. That is printed in special red ink, and it needs to be an official copy obtained from the IRS or an approved substitute. And of course, the easiest way to file these is electronic, so you don't need to mess with the A copy and its special requirements. Several forms, and this online fillable forms include several forms, including Form 1099 Miscellaneous. The backup withholding rate was changed with the change in the tax rates with the Tax Cuts and Jobs Act. So in 2018, the backup withholding rate is 24%. It used to be 28%. There is also a withholding rate on non-resident aliens. That rate remains unchanged. It is not technically the backup withholding rate. That rate is 30%, but that would be on where it's required on payments to non-resident alien individuals or entities. Some mailing address changes. If you are on the list there, the mailing address for Kansas City has changed, and also Ogden, Utah address was added for certain states. If you're on that list, then you will need to send into Ogden, Utah, rather than the other service center that you were used to sending your 1099s to, paper forms. Two new forms, Form 1099-LS, which is for reportable life insurance sales, and Form 1099-SB, seller's investment in life insurance. Generally, I don't think most of us will be dealing with these, but just wanted to give you a heads up that there are two new forms. There was a third one that was listed. I have no idea what it was for. It was a 1098-F, I believe, and that one did not come out as of today, but they were all added to the 1090s. They were added to the 1096, and then that one for the one that did not get released has been blanked over. Filing due date for the 1099 Miscellaneous that reports non-employee compensation in Box 7. That's the only one. The filing due date was accelerated to that it needs to be filed with the IRS by January 31st. This rule also applies to Form W-2. And the reason for this was identity theft and fraud on early filed returns, and what the IRS wants to, particularly with respect to the earned income credit, and also the American Opportunity Credit and the Child Credit. And what the IRS is doing is holding on to refunds on those particular credits until February 15th. And it wants to match up information returns that are generally used or required in order to apply for those credits. That would be non-employee compensation subject to SE. It would as income, earned income, and also wages and withholding. Those need to be filed by January 31st so the IRS can match them to the issuer statements before releasing those refunds. Otherwise, paper forms would be filed by February 28th and the e-file forms by March 31st, which gives you some time to have the forms issued to the recipients, gives them time to look at them and report back on any errors and get those corrected before they're filed. And that checking time is an opportunity for you to find mistakes, correct them before filing so that you don't get penalty notices and things of that sort. The due dates to the payees remain the same. Generally, that's January 31st, but some reports are issued later. February 15th comes to mind for several of them. You may also truncate the recipient taxpayer identification number by replacing the first 5 digits with an asterisk or an X, and this applies to both Social Security numbers and employer ID numbers. I've got 2 examples up there showing what the format would look like, with the ends representing the actual digits being reported. So the last 4 digits of each number would be reported. The others would be asterisks or X's, and the hyphens would be included in that. The Treasury Decision 9675, released in 2014, the Internal Revenue Bulletin is listed at the bottom of this slide. It listed specific series of forms and some specific forms. These on which these are, it's allowed to truncate the ID number, and it'd be forms in the 1098, 1099, 5498 series, forms 1097 BTC, 3921, 3922. And this is on the forms provided to the payee, either on paper or electronically, and this can be the Social Security number, individual taxpayer identification number, adoption taxpayer identification number, and employer taxpayer identification number, but not the filer's taxpayer identification number, just the recipient. And only copy B and other copies furnished to the payee, and you may not truncate that on forms that are filed with the IRS or state and local governments. Now, that list up above is not exhaustive. There are other forms on which it is authorized, but it will state in the specific instructions for that form that it is authorized. One that comes to mind is the 1095C, which is the healthcare reporting statement that applicable large employers issue to their employees. What is an information return? It's a tax document that is filed by businesses, and that's an important distinction. Personal matters generally do not get reported on a 1099 to report certain business transactions. And to help with this, the IRS publishes a guide to information returns. It's included in the general instructions for certain information returns. This general instructions used to be the general instructions for Form 1096, 1098, 1099, et cetera, et cetera, et cetera. And now it's just, that's the title, but it's the same set of instructions. Pages 25 to 29 in the 2018 version. It has 2 parts. The first part of the guide is a listing by form number, and it gives you certain information about the form. For example, the third one down on the list is Form 1098, which is a mortgage interest statement, and it talks about that being for mortgage interest, including points, certain mortgage insurance premiums, and so on. This would be the minimum amount, the floor for reporting. Anything below that amount doesn't need to be reported, but if it's $600 or more, it must be reported, and it is due to the IRS by February 28th and to the payee by January 31st. So there's some information there about what the form's about and what the filing threshold is and when it's due. The second part, that particular guide is not very helpful if you're not sure where a particular transaction gets listed. So the second part of the guide has a list of types of transactions and specific transactions, and sometimes certain payees, and it tells you which form to look for. So you can look it up here and then go to the other part of the guide. And for example, at the top of the third column here, we have mortgage interest, and that's reported on Form 1098, and that was what we looked at on the other page. We're going down the list there. Moving expense reported on Form W-2. This would be moving expenses that are not excluded from employee income. This would be moving expenses that are reportable as wages, moving expense reimbursement, or expenses paid directly by the employer. Now, the exclusion has been suspended starting in 2018, so there won't be any qualified moving expenses that will be excluded from wages. So everything that the employer pays for moving will be included in the W-2. Next one down is non-employee compensation, the thing we're going to be talking about today to a certain extent on 1099 miscellaneous, and that's the box 7 item, although there are a number of other boxes on the miscellaneous. Non-qualified deferred compensation. This was interesting, and I wanted to point it out because it's got 3 different types of payees there. The beneficiary, in which case it'll be reported on a 1099-R, which is a retirement statement. An employee would go on the W-2, and if it's a non-employee receiving that deferred comp, it would be on a 1099 miscellaneous. Now, let's look at 1099 miscellaneous, and I'll probably drift off a little bit once in a while and talk about other kinds of 1099s as we go through, but we're focusing on the 1099 miscellaneous now. Who must report? Any person must report. This is the issuer who fills it out, sends it to the payee, to the recipient. Any person, including a corporation, a partnership, or LLC, an individual, an estate, a trust, certain nonprofit organizations, and federal agencies and governmental entities. So generally, these types of things, if they have certain situation, they must issue a 1099 miscellaneous. So who must file it? They are engaged in a trade or business, and they have a reportable transaction. Rental property is an issue sometimes. There are certain situations where the owners are considered to be engaged in a trade or business. If they are considered to be engaged in a trade or business, you would issue a 1099 to them. If it is a person who's not considered to be, I'm sorry, if they are engaged in trade or business, they're going to issue 1099s for services to them. Other landlords who are not considered to be engaged in a trade or business of renting property, we're going to have to be required, we're going to have to file 1099s under the Affordable Care Act, but that particular provision was repealed along with the provision that 1099s had to be issued to corporations for services as well as non-corporate entities. So the distinction there is if the rental property owners are considered to be engaged in a trade or business, they will have to issue reports to people providing them with services and in other situations. Nominees, middlemen, successors, qualified settlement funds, and so on. These are people who receive the money on behalf of someone else, and so they will be issued a 1099, and then they will turn around and issue 1099s to the actual recipients of the income. And for example, a personal representative or executor of an estate might receive the payment, say for example, a payment of wages in respect of a decedent. This would be wages that were paid after the decedent's death. The Social Security and Medicare tax withholding and wages would be reported on a W-2 because they were earned before the decedent died, but the wages themselves could not be paid to the decedent because the decedent was dead, so they would pay the estate or the personal rep and issue a 1099 to that person or entity for the income tax portion of the wages and would not withhold any income tax on that. So it's a different reporting situation. The Social Security and Medicare was already withheld, so that would not be a non-employee compensation thing. It'd be a box 3 other entry. Engaged in trade or business, reportable transaction, rental property nominees, 1099s and forms in general. The reporting responsibility depends on the form and maybe the type of payment. So you need to see some separate instructions for the particular form and the type of transaction that's involved to see if there is a reporting responsibility for it. What's reported? Reportable payments on 1099 miscellaneous. We're not going to talk about all of them at 1099s, but generally any payments made to a non-corporate business entity for services, and that's a general rule. There are some exceptions. An LLC is usually treated as a partnership or proprietorship unless it elects corporate treatment for tax purposes. And when in doubt, issue 1099. They were talking about that on Tax Talk today on Tuesday. And the discussion went round to, well, what about an LLC? Do you still have to issue one to that? And a lot of people think that when they form an LLC, they are incorporated, and they are not. They are only treated as a corporation if the LLC elects to be treated as a corporation for tax purposes, and then they are considered to be a corporation. But an LLC that is from a sole proprietorship, disregarded entity, owned by the sole proprietor, is considered to be an individual and would receive that. An LLC treated as a partnership is considered to be a partnership, and that's a non-corporate entity. So for disregarded entities, you use the owner's TIN. If the owner is a corporation, then that owner is the one that's being reported to, and they may or may not need to get a 1099 depending on whether the corporation is subject to reporting or not. Certain ones are. Payments made for tangible personal property do not have to be reported. There are some other exceptions, and we'll get into those a little bit, and also minimum filing requirements. You can issue a 1099 where you're not required to, or for an amount that's less than the minimum filing requirement. But if it's at that minimum filing requirement, you do have to issue one if they're a reportable entity. Okay, what must be reported? Following payments made to corporations must be reported on a 1099 miscellaneous. So you've got medical and healthcare payments reported in Box 6. Fish purchases for cash reported in Box 7. Box 7 is for non-employee compensation. This is typically a chef or a restaurant locally going down to the dock and buying fish right off of the boat. And so those need to be reported in Box 7. And there's a difference between that and the fishing boat proceeds paid as a catch sharing arrangement with the crew. Attorney's fees reported in Box 7 also need to be reported to a corporation. Gross proceeds paid to an attorney reported in Box 14, also corporate entities as well as individuals and partnerships. And substitute payments in lieu of dividends or tax-exempt interest reported in Box 8, and payments by a federal executive agency for services to vendors reported in Box 7. Those are reported to corporations as well, and those include parts and materials that are included with those services. Okay, what must be reported? Let's look at the specific boxes on the 1099. I'll show you a picture of that in a moment, but we'll go through the boxes, box by box here. Rents in Box 1, $600 or more. This is often missed, and they had a situation come up where somebody formed an LLC that didn't really have any income, but they rented an office, and they rented the office space in a commercial building from an individual, and didn't realize they needed to issue a 1099 for rent. And when told that, the person checked with all the other tenants, and none of the tenants were issuing 1099s to this person. But when they asked for the W-9, they got it right back, and there was no problem with the landlord accepting that. The landlord, of course, was going to report their income anyway, but rents of $600 and more in Box 1. And a question came up about whether storage units, rental of a storage unit is rent, and there is a regulation that dates back to 1960 that payments for storage, and we coupled that with payments for merchandise, telephone, telegraph, storage, and freight, and similar items did not have to be reported on 1099. And I think that maybe there's a distinction between renting space for storage on a long-term basis or regular basis and having somebody store your property while it's in transit and looking after your property while it's in their care, and that storage cost. And that may be what the regulation was referring to. But when in doubt, go ahead and issue it. Also, the $600 amount has eroded considerably since 1960. So that dollar amount has come down quite a bit in terms of the real threshold that's involved. Royalties in Box 2, copyrights and patents and things of that sort, $10 or more. Other payments in Box 3, $600 or more. Generally, this is anything that should be reported that's not reportable anywhere else on the form. This includes prizes and awards, not prizes and awards to employees. They go on a W-2. But prizes and awards, the payments in respect of a decedent of taxable income, I mentioned that earlier, and various other things. It's kind of a catch-all thing, but it should be something that is actually reportable as income. Federal income tax withheld on Box 4 of any amount. So if you withheld something, and even though the payment was less than $600 or whatever the threshold is, you should still issue a 1099 because you need to report that income tax withholding. And you might as well include the other item on there as well. Fishing boat proceeds of $100 or more in Box 5. That's the catch sharing arrangement, whether that's in cash or fish. I guess it doesn't say. But cash purchases for fish of $600 or more are reported in Box 7. That's non-employee compensation. Medical and health care payments to health care providers for medical or health care services in Box 6 of $600 or more. List the payee as a recipient, whether that's a corporation or an individual provider. Sometimes, in some cases, both the doctor and the doctor's clinic, corporation, clinic, or corporation might get paid by you, and you would need to issue a 1099 to each of them. So you're going to issue it to whoever you paid, whether that's the corporation or the individual provider. This may include charges for incidental items such as injections, drugs, dentures, and similar items. And we might look at dentures as being a personal property type thing, but in fact, it's the process of making the dentures that represents the bulk of the cost. So it's a service. Non-reportable payments generally include pharmacies for prescriptions, tax-exempt hospitals and government facilities, or payments made under a flexible spending arrangement treated as employer-provided health care, and whether that's directly to the provider or reimbursing the employee for the payment to that provider. So those are out of the way. That's generally the employee does a salary reduction to put into that flexible spending arrangement, and then it's paid out even though it's considered to be an employer payment. Non-employee compensation in Box 7, payments of $600 or more. This is generally going to be subject to self-employment tax, and it's for services including parts and materials. Some of these have to be reported to corporations, for example, the payments to attorneys for the attorney fees to your company or to you as the business paying the attorney for their services, whatever those are. That goes in Box 7, and again, regardless of whether that's a corporation or an individual or partnership. Substitute payments in lieu of interest or dividends in Box 8 of $10 or more. Direct sales, Box 9, $5,000 or more. This is one of the. This box does not have a dollar amount that's reported in it. It is simply a check box. And what this involves is direct sales operations such as Mary Kay, Shackley, that kind of thing, where the downline might be reselling some of the stuff, might be using some of the stuff for personal use. And the distinguishing factor as far as the IRS is concerned is a means of making sure that people report their businesses is the $5,000 threshold, where the person might be buying $5,000 worth for personal use, might be more, might be less, and they might be reselling some, but if it's over $5,000, it's worth taking a look at to see if they might actually be operating a business and need to report income from that business. Crop insurance proceeds of $600 or more. Boxes 11 and 12 are not currently in use. Excess golden parachute payments of any amount. In box 13, box 14, this is boxes for the attorneys where they're paid gross proceeds of $600 or more. We'll have an example of that in a moment, so I'm going to brush right by that. Section 409A deferrals in box 15A of $600 or more, 409A income, box 15B of any amount, and state information in boxes 16 through 18. Some states want to see those. I know that there is a requirement now to file information returns. This just changed in North Carolina, and they're going to require that any 1099s that are issued by a business are going to have to be sent to the state as well as to the IRS. And that includes, it used to be just the ones that had withholding on them, and that would have been for non-residents of North Carolina providing services in North Carolina. There would have been withholding on those, and they would have had to been sent into the state anyway. Now North Carolina wants all of them. So looking at the 1099 miscellaneous, you can see the various boxes there. Box 9, of course, has just a check box in it. I want to point out a couple of things on here without spending a lot of time on the form itself. Up at the top, there's a void box and the corrected box. We'll talk about the corrected box in more detail later on. The void box is if you're doing a submission and you have more than one form, more than one 1099 miscellaneous form on a page that you're going to be submitting to the IRS with on paper with the red ink. If you make a mistake on one of the 2 or 3 forms on the page, you can check the void box on that form that had the mistake, make up a new form as the original at the end of the pile, and submit the whole page without having to also do the other 2. The void one will be ignored, the other 2 will be processed. And then, of course, the corrected form will be processed. The corrected box, 1099 miscellaneous does not have a correction form. The W-2 has a W-2C, so the process is a little different. When that corrected box is checked and it goes into the IRS, it essentially replaces the prior 1099 that the IRS has on file with the new information. So you're going to be filling it out as if it were an original return, but check the corrected box and then it will replace it. Otherwise, it's going to be added to the original form if you don't check that box, or something else is going to happen there. The other 2 boxes down on the left half, over to the right, up on the second from the bottom line there, you have a FATCA filing requirement. Generally, you'll not be checking that. That usually involves a foreign financial institution in some way, either as the recipient or the payee. Somebody's got a financial reporting requirement for a foreign transaction. The other is a second TIN notice, and this is where you received a second notice for the same period, same item in the same year, and you have already responded, or you've been receiving the notice, and you're just telling the IRS that this has already been dealt with, and they don't need to send you more notices. And that if the name number combination, for example, is still wrong on this particular 1099, you've already met your due diligence and you shouldn't be penalized for it. So it's just to remove some of the administrative aspects of it. This is a 1096 form. It's a transmittal for the paper forms, and it contains certain information that needs to be filled out and totals. The total amount reported with this form 1096 is box 5 in that the bottom line of little boxes for the money amounts. Below that is a series of 2 rows of form numbers, and you will check the box for the type of return that's being filed with that. You only file one type of 1099 with each 1096. In other words, if you have both 1099 miscellaneous and 1099 INTs for interest that you're issuing, you would need 2 1096s, one for the miscellaneous and one for the INT. So only one of those boxes will be checked. Now the pink spot right in the middle there, that was for the 1098F, which I don't have any idea what it's about. The other 2 were added. and we got a blank box over at the end because they wanted it to be symmetrical. It needs to be signed by somebody who's high enough up in the organization to be responsible for what's being reported, and that's usually at the executive or owner level and not the accounts payable clerk level. I mentioned that box 5. On the back of the A copy, there's a list of the various forms that require an entry in box 5, and it says what amounts to put into the total in box 5. And for 1099 miscellaneous, you see we got to put in anything, add up the numbers in 1, 2, 3, 5, 6, 7, 8, 10, 13, and 14. And add those numbers up, and that's the total in box 5. So it does tell you which number to use there, and also gives you some special instructions. Some forms will not have an entry in that box. Okay, let's look at the attorneys now. I promised you I was going to do this. Report any payments for legal services to your company in box 7. That's not employee compensation, and that's regardless of whether it's a corporation or a partnership or individual or other non-corporate entity, an LLC that is not elected corporate status. I'm sorry, that includes corporations. The payment you're going to report includes corporations. You report the gross proceeds paid to an attorney in box 14, and that's the amount paid to the attorney. I have an example on that. You may have to report the appropriate amount separately to the recipient, and the reporting requirements include payments to corporations. So we have an issue here where there was a legal settlement that results in back pay award of $300,000 for an employee. The employer withholds $100,000 for taxes, sends the remaining $200,000 to the attorney because that's the way the agreement works. They don't pay the employee directly, they pay through the attorney. The attorney then takes the $60,000, takes out the $60,000 in this particular case, $60,000 for the attorney's fee, and the remaining $140,000 gets paid to the attorney by the paid to the employee by the attorney. Now, how does that get reported? The company reports on 1099 miscellaneous $200,000 in box 14 is being paid to the attorney. It also issues a W-2 to the employee reporting $300,000 in wages and $100,000 withheld for taxes. This is double reporting, and my guess is that the medical professions and the attorneys brought this on themselves by apparently having high rates of noncompliance with regard to the money they were handling or the amounts they were receiving. Notice that accountants that have corporations do not have to receive 1099s, and certain other types of service providers do not have to receive 1099s if they are corporations, architects, veterinarians, that kind of thing. Let's see, slide didn't advance, so there we go. Okay, now there's another exception to reporting on 1099 miscellaneous, and that's if it's reported on a 1099-K. 1099-K came out of the Housing and Economic Recovery Act of 2008. It was part of the efforts by Congress to reduce the tax gap, that is the amount of tax that's being reported versus the amount that should be reported. And it added to the Internal Revenue Code, Section 6050W, that required the reporting of gross amount of card payments processed by for each payee by the merchant acquiring entity. Well, what does this mean? If you pay by a credit card or debit card, that merchant has a merchant acquiring entity, usually a bank, and that bank is the one that ends up processing the payments and paying the payee from the card payment. So that merchant acquiring entity is going to issue a 1099-K to these merchants for the gross amount of, that was paid to them from card payments. This includes bank cards, what we would consider mostly bank cards, but credit cards and debit cards, MasterCard, Visa, Discover, American Express, things of that sort. It does not include cards that do not go through a bank. For example, a mall card, where it's only good at stores within a particular mall or something like that, or a local store card. It also covers third-party settlement organizations such as PayPal, and there they have, because PayPal processes a lot of non-business transactions as well, they have a filing threshold, so I believe it's 200,000 or 200 transactions, whichever comes first, $200,000, and they need to send a 1099-K as well. They presume that it's a business if they're receiving a large amounts in large numbers of transactions. Included in the 6050W was a mandate for regulations to prevent duplicate reporting. And what that basically says is that payments made by card are not reported on Form 1099 miscellaneous. And so, for example, if you call in a plumber, and the plumber is a reportable entity, and the bill is more than $600, and you pay by card, the merchant acquiring entity is going to report that payment to the plumber on a 1099-K, and there's no need for you to issue a 1099 miscellaneous. If you do anyway, that's not that important, because the merchant is going to have to reconcile those 1099-Ks anyway to what their income is. And so you've got situations like restaurants where they get tips that go to the employees. Those are included on the 1099-K, but they're not taxable to the restaurant, so those need to be reconciled. As well as when I know I do this all the time, but at the grocery store, the drugstore, I'll take cash back with a purchase, and that is also included on the 1099-K, and of course the merchant's going to have to sort that out as well, and any other non-taxable things that are included on that payment. Okay, when to file or deliver. Recipient copies generally need to be filed by January 30, issued by January 31st. Some forms or recipients may be later. For example, 1099 miscellaneous with an entry in Box 8 or Box 14 is due on February 15th instead of January 31st. It may be wise to issue a separate set of 1099s for those entries, so that you're on time for the other entries that need to be filed by January 31st, like or issued by January 31st, so that the recipients get them in time to prepare their tax returns. The 1099-B also comes to mind, and that was the broker statements, and those generally, we were getting 2 or 3 of those a year as preparers from clients, where they had to correct them because of stuff that came in after the 31st, and they had to issue by the 31st. So now those are due out by February 15th, and we generally only get 1 from each issuer, unless something peculiar happens. To the IRS, Form 1099 miscellaneous with Box 7, non-employee compensation reported, goes in by January 31st to the IRS. That's for both paper-filed and e-filed returns. Otherwise, paper forms are due by February 28th and electronic forms by March 31st. Extensions may be requested. Form 8809 grants an automatic 30-day extension. It can be done through the FIRE system. I would caution you on that. As I recall, I know the W-2s are this way, but I'm recalling that the 1099s that with the Box 7 entry, if you need to extend those, you may need to write a letter, or you may need to have a good excuse on that 8809. It'll tell you there'll be a checkbox on it, say this is for something that needs an excuse, and it needs to be disaster and extenuating circumstances and all that kind of stuff, and they are going to be stingy with the extensions. An additional 30-day extension may be requested in a hardship case as well. And on the W-2s, I recall they only grant a 15-day extension unless it's a really bad situation, and then they can grant it for 30 days. Electronic returns, you must file electronically if you have 250 or more forms. The requirement is separate for each type of return. So for dividends, interest, miscellaneous, you would have a different 250 form requirement for each. So if you had 270 miscellaneous and 10 divs, you could file the divs on paper, and you would have to file the miscellaneous electronically. This also applies separately for corrections. So if you had 15 corrections on those 270 miscellaneous forms, you might be able to file the corrections on paper. There was some discussion. I'm not sure where it's gone yet, but there was some proposal by the IRS to expand the 250 form filing requirement to mean if you had 250 or more forms overall that you had to file them electronically. And I've not heard yet that that's actually gone into effect. I also didn't check before doing this presentation, so I might be wrong on that, but keep an eye on that because it was proposed. The FIRE system is what's used. That's filing information returns electronically. It requires software to produce the file format. To figure that out or figure out what you need to do, see publication 1220. I'm not going to get into a lot of detail on this, but any filer may participate, and I prefer it because I don't have to line up that red ink copy A on the printer or the typewriter and get everything exactly right on it. And it's a lot easier just to be able to put it in electronically and transmit it. My accounting software would do that, so it was very easy for me to do that for clients that needed to issue 1, 2, or 5 or 10 1099s. And we could do that very easily. It would create the file. We could file it online, and then I could print the forms using the software. It would print the forms with the file format on the recipient copies on plain paper, and that worked out really good. The FIRE system requires application and approval. That application form is 4419, and you want to do that at least 45 days prior to the filing date. So if you're thinking about doing this, you need to get that done now. This is available. Let's see, the transmitter control code is issued and sent by mail. And once you have that transmitter control code, you'll be able to file through the FIRE system. You create an account. This can be done before approval. Company name, address, phone contact, and email, and so on. And you can also use Form 8809 to e-file or set that up to be e-filed through the FIRE system as well. There are some third-party providers that will allow you to file 1099s through them. And what you do is you look at the IRS website, find out who those authorized e-file providers are, and then they will charge a fee for that, though, and there's no fee for filing through the FIRE system directly. So it just depends on what you're going to do, but you will need to get some sort of software in order to do that. And I've also found that if you buy the package from one of the office supply stores, generally there's some information in there that how you can contact one of those e-file providers and file through them using their software. Corrections. There are some, because of the accelerated due date for the W-2s and the 1099 miscellaneous that has non-employee compensation, the IRS realized that there's going to be more errors that go undetected before filing, and they set up a safe harbor de minimis situation where the employer will not be penalized or have to really do anything if there's an certain type of money amount errors on there. This would be information returns that have incorrect dollar amounts. And the previous standard, of course, was that a dollar amount, as well as a payee TIN, or a surname, or anybody's taxpayer identification number on the form, was never inconsequential and had to be corrected. Now we have this de minimis thing. That other rule still stays in place, but you have a safe harbor here. This is if there's any single dollar amount that has a dollar variance of not more than $100, and any dollar variance for withheld tax of not more than $25, the safe harbor rule applies. If it applies, the payer will not have to correct the information return, and the information return is treated as filed with all the correct required information. If, however, the payee elects to have the payer issue a corrected return, the safe harbor does not apply, and the payer must, within 30 days of the payee election, furnish a corrected payee statement and file corrected information return. And in that situation, the error is treated as due to reasonable cause, and there is no penalty. So even if the payee elects to have that correction made, you're not going to get penalized for that. Now, for details on this, you'll want to see Notice 2017-9, issued on January 23rd, 2017. It's got a lot of other information in there that you need to know. For example, the payer may prescribe the manner of making the election, and it lists a bunch of conditions there. Any reasonable method, however, an electronic online option cannot be the exclusive method. If it's reasonable, the payee must use it for a valid election. The payer cannot impose any prerequisite condition or time limitation on the election other than those indicated in the notice. For example, you can't say, well, within 60 days you must tell us if there was an error on it. The payee has any time during the 3-year statute of limitation to ask that it be corrected. The election may be applied to current, subsequent, or prior years. The payee may revoke the election, and the information to include in that election is specified in the Notice 2017-9. So you will want to take a look at that so that you're prepared in case you get any of those things in. The safe harbor rule only applies to inadvertent errors in money amounts and on filed returns or furnished statements. So it does not apply to intentionally misreported amounts, failure to file returns or furnished statements timely, even if the dollar amounts meet the requirements. And the payer is required to keep records of elections and revocations. Now, you may also voluntarily go ahead and correct any errors that you do discover, even where the payee does not elect to make the correction, and payers are encouraged to do that to ensure the payee gets credit for all earnings and prevent mismatches and as an aid in tax administration. But this safe harbor is all about penalty relief for payers, so if you go ahead and do something like that, that's not going to subject you to penalty if it would otherwise qualify. Okay, let's take a look at corrections now. There are 2 types of corrections involving 1099 miscellaneous or 1099s in general. Type 1 corrections and, interestingly, Type 2 corrections. And also coincidental, or maybe not, Type 1 corrections require only one form to be filed to make the correction, and Type 2 corrections require that 2 forms be filed to make the correction. So it's beginning to be easy to remember. A Type 1 correction is going to involve generally an incorrect money amount, code, or a check box, or a situation where a return was filed when one should not have been filed. These errors require only one return to make the correction. So your steps are, you take the form that you're correcting, you prepare a new information return, enter an X in that corrected box. Remember I said that before when we were looking at the form. You enter an X in the corrected box, and optionally you can put a date up at the top. And in some cases things get messed up when they get corrected, and the issuer ends up issuing 2 or 3 corrections. And it's good to know which one is the last one for the employee to help in preparing it. So that's for your information and for the payee's information, that date at the top of the form, and correct any recipient information such as money amounts. Report all the other information as per the original return, and that's important. Now on the W-2Cs, you only report the changes. On the 1099, you're going to report everything as if it were the original one, but it's all going to be correct, and you're going to put an X in the corrected box so that the original filing gets wiped out. It replaces the original filing. On Form 1096, you prepare a new transmittal Form 1096, provide all the requested information, and file it and the copy A of the return with the appropriate service center, and do not include a copy of the original return that was filed incorrectly, as that will get processed again, and you'll be right back where you started. So you don't want to do that. Or you'll have 2 1099s on file with the IRS, one that's correct and one that's incorrect. For the Type 2 corrections, this is going to involve some sort of identifying thing or the form itself. So if there was no payee taxpayer identification number on the original return, and that's possible if you were not given one and you had to issue a 1099, you issue it anyway, and you just don't report the number, and you'll probably get some sort of notice saying we need the number, and you show that you've made best efforts to get that number. The TIN could be a Social Security number, employer identification number, a QIEIN, or an ITIN, individual taxpayer identification number. Or it's an incorrect payee TIN, or it's an incorrect payee name. In other words, the information doesn't match. One of or both of those items is incorrect, or the original return was filed using the wrong type of return, or possibly the wrong year return. So, for example, if you issue a 1099 div when a 1099 INT should have been filed, you're going to have to cancel out the 1099 div and issue the 1099 int to get the correct information in. So 2 separate forms are required for this. So in step 1, you prepare a new information return, enter an X in the corrected box, and the date. That's optional, same reason as before. Enter the payer, recipient, and account number information exactly as it appeared on the original incorrect return. However, enter 0 for all money amounts, all of them. So everything is zeroed out. It matches up to the originally filed return, and it essentially covers it up with zeros, so it doesn't have any impact. Step 2, you report the correct information on the correct form. Prepare a new information return. Do not enter an X in the corrected box at the top of the form, otherwise it's going to be looking for one that doesn't exist. Prepare a new return as though it is an original, and include all the correct information on the form, including the correct TIN and name. For 1096, you prepare a new transmittal form, 1096. Enter one of the following phrases in the bottom of the margin of the form to correct the TIN, correct the name, correct the return. Provide all the requested information on the form as it applies to the returns prepared in steps 1 and 2. File Form 1096 and copy A of the return with the appropriate service center, and do not file a copy of the original return that's being corrected. Now, you might have to have 2 1096s there. For example, if you're changing a div to an int, you're going to have a 1096 for the div correction and a 1099 int for the interest correction. You can also have this for years where you might have used a 2017 form for 2016 transaction. You need to correct that as well, or you crossed out 2017 and put 2016 in the box. Believe it or not, people do that. And anyway, I called the IRS one time on this, and I said, how far back can we get these? And they said, how far back do you want to go? So the implication is you can go back to at least 1955 and get get the copies of the forms that you need in order to file that correct form. I don't know. I've not tried to do that, but that was the implication, that they can go back as far as you need to go. Form W-9, we're going to talk about tax ID numbers now, Social Security number, taxpayer identification number, employer identification number. Use a W-9 for U.S. persons, including entities. You use a form in the W-8 series. There is no form W-8. It's a W-8-BEN, W-8-BENE, W-8-EIC, so on. So this is used for non-resident persons and entities. Which tax ID number to use. The W-8 does some other stuff too. It allows for asking for treaty exemptions and exceptions and some other things that are involved in foreign taxation, foreign person taxation. Which taxpayer identification to use. If you have a sole proprietorship, for example, the sole proprietor may have an employer identification number as well as a Social Security number, and the sole proprietor may choose which number to use. The IRS sometimes has said they prefer the Social Security number. Well, that's on the IRS. I give my employer identification number to my vendors on my customers on the W-9, and that says a sole proprietor. It matches up to my Social Security number and my tax return because it's filed Schedule C with that ID number on it. And anyway, a disregarded entity will use the tax ID number of the owner of that disregarded entity. If it's a sole proprietor, it'll be the sole proprietor's individual number. The LLC will have an employer identification number, but If it's a disregarded entity, it's not going to be the reportee in this case, the recipient. And so it's going to be the individual owner's Social Security number or employer identification number, or if the individual owner is a corporation or partnership, it'll use that entity's name and tax ID number for reporting purposes. I think I just addressed that. There's a verification publication, 2108A, and that is really helpful in terms of not just getting into the verification system and doing verification, but also what's involved in the verification, what number to use, what name to use, and so on. We'll talk about some of that as we go along here. We should have enough time to get to much of that. I'll skip through some fairly quickly because once you see what's going on, it's fairly obvious and you can read as well as I can. So, okay, solicitation is really, really important with these tax ID numbers. You have to be able to show that you solicited the number because if it's incorrect or it's missing or the name's not correct, you could be penalized for not having the correct information on a return, and the penalties are pretty stiff. We'll talk about those in a moment. The information returns must include the correct name and taxpayer identification number combination. The TIN is compared at the IRS to the Social Security Administration's numbers list that it provides to the IRS, as well as the IRS employer identification number and ITIN lists. And there's some opportunity for false positives and false negatives in the way they do this because they use a name control that is only 4 characters long. And we'll talk about that in just a second. But it's compared to those 2 lists. One of the things you don't want to do is use the IRS system, TIN verification number system, to verify Social Security numbers for employment purposes. That's done with the Social Security number verification service, and you're going to the source on that one, whereas this is an uploaded setup to the IRS system. Also, you don't want to use the Social Security number verification service for verifying numbers for 1099s. There are 2 different purposes. You've got 2 different databases involved. And also, you don't want to use E-Verify for either of these purposes because that's a completely different use. Even though E-Verify wants that Social Security number on the I-9 if it's an E-Verify employer, it is not necessarily verified by E-Verify because it's not looking at documents that that aren't presented, and the Social Security card might be one of the documents that's not presented by a job hiree. So you don't want to be using these systems for different purposes than what they're intended to use. Also, it's illegal to do that. So IRS, the EIN and ITIN list, or the TIN verification service at the IRS is for verifying names and numbers where backup withholding might be involved. And in the way the IRS checks to see if you have transactions that might involve backup withholding is they look to see if you filed information returns on which would have required backup, on which you would have reported backup withholding had it been required. In most cases, it's not required to backup withhold, even though the payments are subject to backup withholding under certain circumstances. Again, we'll get into that in a minute. So anyway, if you file 1099 miscellaneous, you go in to register for this, the IRS is going to recognize you as a payer of payments that might be subject to backup withholding and will allow you to access the system. Other times they may ask you to provide other documentation as to why you need to do that. And the Social Security Administration numbers list is only for employers using that to verify Social Security numbers for W-2 purposes. There has been a situation, employers can use that free. There has been a situation where banks and so on could pay a stiff fee to be able to access those for mortgage lending purposes and things like that. But I I wasn't able to find that the last time I looked, and I'm not sure that's still in effect. Okay, in setting up the template for Compliance IQ, all my arrows got moved. And so I'm going to tell you where they should be. I'm going to be having similar arrows on similar things. Okay, the employer identification number is applied for on a Form SS4 that goes to the IRS. And on the SS4, on line 1, that's where the first arrow is supposed to be, is the legal name of the entity or individual for whom the EIN is being requested. And that's the name that's going to appear on that entity's tax return. So if it's an individual, it's going to be the name of the individual, name of the corporation, and so on. That's important. Line 2 is a trade name of the business or the DBA or whatever. And you may actually be issuing checks to that line 2 name, but you have to issue the 1099 to the line 1 name. The other arrows should be moved down similarly. They should be pointing to line 8A, asking about if it's a limited liability company, if it is the number of the members of the LLC members, it has 8B. If that number is 1, it's a disregarded entity. And then the type of entity down on line 9A, I was pointing to the Social Security number for the sole proprietor, showing that Social Security number is matched to that employer identification number. So persons filing a 1040 with a Schedule C on it can use either number. This one matched up nicely. This is the W-9, request for taxpayer identification number and certification. Now, you don't have to use this to get the tax ID number of the payee and the name. You don't have to use this. You might have some way of getting that otherwise. You can write it down on the back of your hand if you want to. The thing is that there's a lot of information reported on this form that you may need to know in order to decide whether you need to issue 1099 to them or not. Also, there are certain circumstances under which the W-9 has to be signed, or what they call certified. And if it needs to be certified, then you do have to use the form or a substitute form that contains all the same information. Now, in most cases for Form 1099 miscellaneous, on the initial solicitation where you're asking them for their name and number and any exemptions and what type of entity they are and so on, and their address, this is the easy thing to do. You ask for it on this form, and they should give you all the information you need to know to do what you need to do and avoid penalties. So it gives you a basis for asking for it. It's an official form. They don't, you know, that it looks like it's something that they need to fill out. And in this day and age of identity theft, that's often a concern. Why do I need to give you my number? And so this form lays that out in the instructions. You have to use this in certain circumstances, like when you send out the first B notice, you have to use this form, and it has to be signed when it comes back. Okay, W-9, you've got line 1. That's the name is shown on your income tax return. Okay, that's going to be the name of the entity that's filing the tax return reporting the income. Line 2 is the business name. And again, you might be writing checks to that business name, but that's not where you're going to issue the 1099 in most cases. And then box 3 is checking the appropriate box. And I'm going to talk about this right now, I think. And then I think I might have a blow up of this a little later so you can see it a little more clearly. But box 3, individual, sole proprietor, or single member LLC. That's a little misleading, but the note under the limited liability company explains that. It didn't used to. It explained it improperly, and then the instructions buried inside the middle of the instructions explained it correctly. I believe some people, including myself, pointed this out to the IRS, and not too long after that, the instructions on the note on the front of the form matched what the instructions say back in the form itself, and now it's consistent, except for it says single member LLC up on the individual, sole proprietorship, and so on. That would be true if the individual member is an individual or sole proprietor, which are the same thing. Limited liability box is only checked if it is more than one member. A limited liability company that has only one member is a disregarded entity. If it's a limited liability company that has more than one member, it's going to enter in that box whether it has elected C corporation status, S corporation status, or has elected or has taken the default partnership status. If it's a single member limited liability company or a disregarded entity, it's going to check the type of box on the first line in box 3 related to the type of entity that the single member is. That is, if the LLC is owned by a corporation and that's the only member and it's a C corporation, they're going to check that C corporation box. And that is the entity that should be listed on line 1 and the business name on line 2. Okay, moving over a little bit, box 4 there has some exemption codes in it, and that's the exempt payee code, if any, and the exemption from FATCA reporting code, if any. Friend of mine, in charge of accounts payable and payroll for some organizations for a number of years, different ones, and he had his accounts payable people treat every entity that they were writing checks to as a vendor. And that included the Internal Revenue Service. And he also went a little bit overboard, maybe, I don't know, not necessarily, but they would refresh their W-9s periodically, like every year or two. And they would send everybody a W-9 just to make sure nothing had changed, like an address or type ID and things like that. The IRS would get that form. It would indicate in that box 4 that they were a governmental agency, a federal agency, and put the code in for that. Sign it and send it back. And they put it in the file, and that was their documentation that they didn't have to send a 1099 to the IRS. You can do this, well, also you've got the FATCA reporting exemption. Remember, that has to do with foreign financial entities. If you are subject to that, you usually know. And you would put in there, as a requester, you would put in your name and address and so on, and maybe indicate in that FATCA reporting code that if there is no FATCA reporting requirement involved in your transactions with that business, that it's not applicable, and then they don't have to worry about figuring out whether they're subject to FATCA reporting or whatever. Anyway, they're exempt from it if they fit into one of the categories that's exempt from reporting under FATCA as foreign financial institution or whatever it is. Name and address, whoops, got to go back a page there. Taxpayer identification number, they got a place for the Social Security number. Obviously, this is going to be only individuals and the sole proprietor and possibly the LLC that is single member LLC and the sole proprietor is getting the report. And that individual can also, if they have an employer identification number, they can give you the employer identification number instead. If they give you both, which number do you use? Well, I guess that's your choice. And the IRS has said they prefer the Social Security numbers. So, you know, it's up to you, I guess, if they give you both numbers. But they're telling you that they got 2 numbers. And as I said, I give out my employer ID number for identity theft reasons. I don't want to have my Social Security out there. Although, you know, back in the early days before we got our practitioner taxpayer identification numbers, just about everybody in the world had my Social Security number because it was on every tax return I signed. So certainly that was a concern back then. Okay, what is this name control issue? The name control is the first 4 letters for individuals. It's the first 4 letters of the last name of the individual. Some illustrations there of that. Hyphenated names, the first 4 letters of the first last name, and joint accounts. And there's a 3-letter name there, and that would be the 4 letters in that case. And so that's what you're kind of watching for. So that's why you want that name to be accurate, and you want them to tell you what the name is. For sole proprietorship, it's going to be the first 4 letters of the last name of the owner of the sole proprietorship, the individual. So got Mark Hemlock with the Sunshine Cafe, Karen Birch with the Ace Computer Company. The name control is HEML for Mark. And we'll look at the W-9 filled in for Mark Hemlock. So he's got Mark Hemlock on line 1, the Sunshine Cafe on line 2, which might be who you're writing the checks to. And then the checkbox for individual sole proprietor, single member LLC, check there. Estate's going to be first four letters of the last name of the decedent. Trust and fiduciaries, first four letters of the grantor or the name of the trust. Partnerships, the trade or business name of the partnership are the first four letters of the first partner's last name. And this is from the SS4 that they issued, so they should know what that is. Words like the are not included, otherwise everybody be the something or other and have almost an automatic matching. And so there's some different examples there. And then other organizations is going to be the first four letters of the name of the organization, ignoring spaces. And you don't include titles, words, extraneous words, special characters, and so on. Okay, this is the picture of the W-9. I talked about the first two parts, certification. Certification, and I talk about this more in subsequent slides a little bit, but there are four things that can be certified on this form. The number shown on the form is the correct taxpayer identification number. I'm waiting for one to be issued to me. They can sign that. If you really want it signed on the initial solicitation, you can ask them to sign it, and they should sign it. But on the initial solicitation, that's not necessary because there is no requirement to get a W-9 from everybody. You can get that number from other sources, except in certain situations. For example, interest in dividends with a bank, or you do have to have a signed W-9 for that because backup withholding. And that's what line 2 is about. I am not subject to backup withholding because I'm exempt or have not been notified by the Internal Revenue Service that I am subject to backup withholding as a result of failure to report interest or dividends, or the IRS has notified me that I'm no longer subject to backup withholding, and I'm a U.S. citizen or person. And in fact, you're certifying all four of those things if you sign it. And the FATCA codes entered on this form, if any, indicate that I exempt from FATCA reporting. Okay, number 1 doesn't require certification. Number 2, generally, if somebody is a subject to backup withholding, they cross that out so that they can sign it and say that, yeah, well, I am subject to backup withholding. But generally, they're not going to be subject to backup withholding if they provide you with the correct TIN. I'm a U.S. citizen or other U.S. person. This is sometimes used by foreign partnerships for their U.S. partners, so that there is no backup withholding on the U.S. person's share of the partnership income. So they can use that to say that I'm not a foreign person, so you don't have to withhold the 30% on me or the other backup withholding. The FATCA codes, if there aren't any on there, then that doesn't need to happen. If 2, 3, or 4 are the thing that they're certifying, then that needs to be signed. If that person has received a first B notice, they have to sign that W-9 coming back in, or if it's any other time after that, they have to sign it saying that, yeah, I gave you the wrong number earlier or something like that. They're not necessarily saying that, but they're certifying then that it is the correct number that they are giving you this time. Obtain the TIN from each new payee, even for a one-time transaction. You may use a substitute W-9 or W-8. I've seen them on the backs of purchase orders and embedded in brokerage accounts, contracts, and so on. But it must be clear that by signing the W-8 or W-9, they are not agreeing to anything else in particular on the form. Obtain when the pay account is open or when the first transaction occurs. Otherwise, it becomes difficult to get it after the fact, and you don't know if you're going to pay that person more than once, even if it's going to be less than $600 on the first time. The W-9 does not have to be certified unless for interest, dividends, possibly broker withholding. If the payee does not provide the TIN to begin backup withholding immediately, send a first annual solicitation out for that thing. If you don't get it, send it out by December 31st of the first year that you paid the person. And also, if you get a 972 CG proposed penalty notice, you send out a solicitation. You won't get one within the first year because you haven't issued a 1099 yet for them. So, but you do have to watch that. second annual solicitation by December 31st of the second year. If you get a CP 2100 or 2100A, you're going to send out what's called B notices. These are notices that you're going to begin backup withholding on that particular person. You send those B notices out within 15 days. That counts as the annual notice requirement when you send that out. And you stop backup withholding when you're provided with a TIN. You might get a B notice if you filed if you were not provided with a TIN and you filed a 1099 without a TIN on it, you may get a 2100, 2100A. Following the solicitation procedure, due diligence requirement is satisfied. You've established reasonable cause for not having the correct name tax combination. So failure to obtain a W-9 and failure to file Form 1099 or failure to document your receipt of all the information you needed to determine whether that payee might be subject to backup withholding or is required to provide you with a TIN could result in the payer having to pay the 24% backup withholding under failure to withhold rules, which says that if you're responsible for withholding and you fail to do so, you become personally liable, or the business becomes liable, and then the individual is responsible to become personally liable for that tax that they failed to withhold. TIN verification, you can register to use the TIN matching application. It can be used by payers of income subject to backup withholding, and it can be either an interactive or bulk matching process. I've given you the breadcrumbs on the irs.gov website to get to that. I've got a couple of screenshots. I'm going to go through this quickly, but those are the steps you go through. Watch out, they could change. So anyway, this is where you go when you get to e-services. There's some hot topics and some information there. And there are two go buttons down below. One gives you that publication 2108A that I told you about that tells you how to do this. The second go button takes you to the application process or the registration process to get into the application. Some other information there about it, and registering for online self-help tools, including the TIN verification application. You register for the program as an individual. Individuals register for it. They get their own PIN number. The PIN belongs to the user and is transportable. The confirmation code is sent by U.S. mail. The primary or first user is a principal person. This person registers the company, authorizes access for the other users. The accountant or tax advisor may be authorized to be a user, and the principal person also revokes access for other users. And they would want to do that. And if you changed accountants, for example, take your accountant off. If an employee leaves your employee, you want to take that employee off your access. If they change departments and they don't need access anymore, you take them off. You submit the name or TIN information for matching as it comes in on a as-needed basis, or in bulk. You can save them up and send them all in at once. If you don't get a correct match, ask the payee for the correct TIN, but make sure you go through your steps that you got that number into there before first, because sometimes there's a mistake made somewhere along the line. Entering it into the matching application, entering it into your system, copying it from the W-9, just anywhere along the line something can happen, including a mistake by the payee, where I had a situation one time where I had been filing returns for a young man for 5 years, and on the 5th year I finally convinced him to file electronically. We filed electronically, and it came back with a name number mismatch, and everything matched. I mean, everything we'd filed previously matched, everything matched. I asked him to bring his Social Security card in so I could make a copy of it just to be able to show that it did match. It looked like it matched. I asked to make a photocopy of it, made the photocopy, and lo and behold, we discovered the shading on the Social Security card caused a 5 to look like an 8, and he had been using the wrong number all his life. So you do have to be kind of careful with this, because sometimes it's not an intentional mismatch, but you ask them for the correct TIN where the combination does not match. If the correct TIN is not received, this is not notice from the IRS to begin backup withholding. This is important. Your TIN verification is not notice from the IRS. There are false positives and false negatives. So
You send your first annual notice by December 31st and a second annual notice if you still don't get a corrected TIN or some sort of thing that says this is my correct number from that person, and you use the number you have. Backup withholding is at a 24% rate. It applies to just about anything, well, rents, royalties, independent contractors for services, where the payee did not provide the payer with a taxpayer identification number in the required manner, or the IRS has notified the payer that the taxpayer identification number provided by the payee is incorrect. How do you get notified? Well, this is, and you withhold until payments until the TIN is furnished. If you get a CP 2100 or 2100A from the IRS that the TIN is incorrect, you send the B notice to the payee within 15 days. As I said, the B notice means backup withholding notice. You're notifying the payee that you're going to start taking backup withholding out of payments to them. You must begin withholding within 30 days of receipt of the notice. You may begin earlier. If you're not making any payments to them, obviously you're not going to withhold anything. You stop withholding within 30 days of receiving a certified W-9. It has to be signed at that point. Validation of the SSN is required for a second B notice. They go to the IRS to get some sort of a letter validating that that is in fact their correct number and the 2100-2100A was incorrect. And you report this with also if you get a 972CG penalty notice, you will also want to send out notices to establish due diligence for not having the correct information. And the proposed penalty notice is where the IRS is saying we're proposing to charge you penalties for these incorrectly filed returns, you can dispute those by showing that it was correct or that you did your due diligence, which is all this solicitation stuff is all about. So if you did your due diligence, you won't be penalized, but you have to be able to document it. Report the withholding on Form 945 annual return of withheld federal income tax, which is filed by January 31st or February 10th if all the deposits were on time. And you report the withheld tax in Box 4, Form 1099 miscellaneous for each person you withheld tax for. If you withhold in error, you can refund that if it's done before the end of the calendar year, but it must be due to payer error. Withholding prior to receiving a timely W-9 is not payer error. So that stands. If it's already deposited, you can apply for a credit or refund. If you haven't filed your 945 yet, you do that on the 945. If you have filed your 945 already, you file 945X to do that. 945 is an annual return. It has two lines on it basically for withholding amounts. The line one is for federal income tax withheld from pensions, annuities, IRAs, gambling winnings, and so on, just about everything. And line two is backup withholding. So it's distinguished there. Also, there are deposit due dates involved. If your total is less than $2,500, you don't have to show your deposit due date or your liability dates for the determination of the deposit due dates. The look-back period is the second preceding calendar year because it's an annual form. So for 2018, the look-back period is 2016. If you have $50,000 or more in backup withholding, or other withholding on 1095 or 945, you are a semi-weekly depositor. If it was under 50, you are a monthly depositor. If you're a monthly depositor, your deposits are due the 15th of the month following the liability date. The liability date is the day on which you paid the person and withheld the tax, or should have withheld the tax. So you would show the amount of liability in the month that you made the payment. If you are you can designate somebody and they can get a PIN number. So for about a year, the IRS will talk to that person about the return. They can't represent you, but they can talk about it. Signature has to be somebody high enough up in the organization to be responsible, executive level or owner level. And pay preparer use is only for third-party payers, not preparers, not employees who prepare it. So the accounts payable clerk, even though you probably pay them, is not going to be signing that as a preparer. The semi-weekly depositors will indicate the date in the month columns that they made the payment that required backup withholding and show the liability on that date, and then the IRS is able to determine whether that should have been deposited by the following Wednesday or Friday, depending on what day of the week the payment was made. There are some penalties for late filing and furnishing, and this includes failure to file timely, failure to include all required information, include incorrect information, file on paper when electronic is required, failure to report or report an incorrect TIN, and file paper forms that are not machine readable. Failure to file or failure to provide correct payee statements, that'd be the furnishing by the due date for furnishing, either January 31st or February 15th, depending on the type of information being reported. There are two different penalties, separate penalties, one for failing to file correct and one for failing to furnish correct information returns on time. And the amounts were originally fairly reasonable, and then they upped the penalties and put in discounts for early correction. And then what we're looking at here is for 2018 forms, the ones coming up filed in 2019, the penalties started being indexed in 2016. The maximums were also indexed. So we have per form penalties going up for 2016 forms going up for $30 to $50. And before August 1st from $60 to $100, and after August 1st from $100 to $250. And the intentional disregard going from $250 to $500. They were indexed. The index computes the new amount and rounds it down to the nearest $10 for the per form penalties. And the index did not reach $60, not even over the last 3 years, nor the penalty for the $100 one. But the $250 one, by the end of 2016, it has $260, so it got rounded down to $260. And for this year's forms, 2018, filed in 2019, it's going up another $10 to $270 per form. And the disregarded, intentional disregard penalty is going up from $530, where it ended up in that first year after indexing, to $540 for 2018 forms filed in 2019. The maximum penalties also increased, but not at the same pace as the per form penalties. I believe those are rounded down to the nearest 500. Also, civil fraud damage may be payable to a person that you've filed a fraudulent information return for, or claim to be made to that person, and that penalty may be $5,000 or more. Reasonable cause is one of the exceptions to the penalty. I described that on the next slide. There's also inconsequential error or omission. This is one that does not hinder processing. And an error in a payee in a TIN or payee surname or any money amount is never inconsequential, except you have that safe harbor exemption that we talked about earlier. There's another de minimis rule for corrections, and this has to do with the number of corrections as compared to the total forms filed. So it's the fewer, the greater 10 forms being corrected, or 0.5% of the forms filed. That would be 2,000 to get to the 10 forms. Forms were filed timely. They had to be filed timely. It's not an exception for late filed forms, and contain incomplete or incorrect information and be corrections completed by August 1st. Reasonable cause, the payer must show that the payer acted in a responsible manner both before and after the failure occurred. There were significant mitigating factors, such as a history of filing correct information returns. That is an IRS example, as is the next one, failure due to events beyond the payer's control, and that is the payee did not provide correct TIN in response to requests for corrected information. So those solicitations are key to this process, and that the payer took steps to avoid the failure, and that includes initial solicitation of the TIN, and if required, the annual solicitations. Penalty avoidance, be sure to use correct forms and filing methods, solicit the TINs, verify name TIN combination, verify other information, file close to the due date if you can, so you have that extra time for the mistakes to be noted. These mainly relate to paper forms, other forms, 2 or more types of returns submitted with one form 1096, reporting information in the wrong box or in the wrong form, changing the names of the boxes, using prior year forms, submitting photocopies, separating copies A and filer's information does not match. And we do, I did run over about a minute so far for the using the formal presentation and encroached on the question and answer period, but I can stay for a few minutes. I'm hopeful that Compliance IQ is okay with that. So I'm looking at the question and answer box, but before I get to that, I'd like to thank everybody for attending this